you come with a little bit of good news, not much because it's just a slight bit higher. And of course, we saw that first quarter growth figure. Do you think that's changed expectations?
I certainly think the Q1 growth figure that we saw, which was much higher than economists had expected, certainly influenced their forecast in May for the May poll. And the reason why economists have moderately increased their forecast is because they are expecting that the manufacturing sector, which has mainly been a drag on the economy so far, is slowly going to tick up. Its output levels are slowly going to rise, and because of that, they have raised their expectations. But I mean, going forward, it will be interesting to see whether economists stick with these growth forecasts, because worries about the global economy have re-emerged, and we're very linked to Europe and the worries that are happening there. So it will be interesting going forward to see whether they're going to stick to their forecast, because they are very upbeat, much more upbeat than the government is.
Well, you talked about that manufacturing sector, and of course we saw that growing by 14.5% in the first quarter, so really boosting those growth numbers. We're getting that manufacturing data out in just a short while, I think 1 o'clock or 2 o'clock, yes. And I think you have an expectation of about 5%.
Yes, the median consensus is for output levels to rise to 5.0% from 4.6% in March, and we're just going to see shortly at 1 o'clock whether that's going to come through. And if it does come through, it will certainly boost these expectations that growth is really going to start to accelerate in the second half of the year. And if it comes much lower than the expectations, well, we're going to see next time probably people are going to cut this growth forecast.
Well, just tell us again how you put this together, because it is 6 indicators you look at. You speak to a number of economists, and then you just put all the material together and hope for the best.
Well, the GDP and CPI and rate expectations have a bigger weighting in the econometer, and then you have the rand as well and the PPI. So if any adjustments in GDP expectations, they change, and any adjustments in CPI expectations, they change the econometer. And you will see one of the reasons why the econometer is up this month is because compared to last month, inflation expectations have eased quite a bit. And I'd have to say that has also got to do with the inflation number that we saw, which was lower than expectations. The inflation went to 4.2%, and economists were expecting 4.4%.
So is that changing their interest rate expectations for this year, or are they still expecting that interest rate hike at the end of the year?
The expectation is that the rates are going to rise to 6% by the end of the year. But really the market is divided, Stephen. It depends who you speak to. And quite a few economists have actually changed their forecast from 2 months ago, because with that inflation number coming through, and also the expectation that the food inflation you saw in the numbers had slowed a bit, and food and oil were the main drivers of inflation, and oil has come off from its highs. So that's why people have come down, have revised their inflation forecast downwards.
They've pushed that interest rate out till next year.
Yes, they've pushed it, but it depends who you speak to. For most people, it's still by the end of this year.
Now, see, they have the rand. Not much change from the last survey. So last survey they were looking at 7.10 by the end of the year. Now they're expecting 7.11, so pretty much the same, but the rand is a difficult one to get right.
It is a difficult one to get right, and I mean, for a heavily traded currency such as the rand, 7.10 really is still within current ranges where it's trading at, and that resilience is still expected to be maintained by the currency.
And then going out a year, they're expecting a mild deterioration going forward. So you've got 7.62 by the end of next year, 7.99 by the end of 2013. So although they do expect it to weaken, it looks like quite a mild deterioration they're expecting for that.
Exactly. Like I say, for a currency as heavily traded and as volatile as the rand, that's just very moderate deterioration in the currency, and it's going to help the central bank to not rise interest rates. I mean, we're only expecting 150 basis points for all of 2011 next year, because the repo rate is seen ending the year at 7.5%. So because of that rand resilience, the central bank will be able to raise rates only moderately.
So you said 200 basis points by the end of 2012. Yes, how about 2013? Would we expect more interest rate increases in the current cycle?
Yes, another 100 basis points we're expecting in 2013. Still, if you think about it, that rates have come down by 650 basis points. So they're not completely going to unwind the loosening cycle that we saw from 2008 December. They're just going to go up a little bit.
Okay, so 300 basis points in the current cycle, and that's more of a normalization than of monetary policy.
It is more of a normalization than anything, because they don't want to to tighten policy too much, because much as growth is going to rise, it's still very delicate, it's still very vulnerable to what is happening globally.